Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, May 19th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES right now. You'll notice here after yesterday's rally here late in the day, especially, this thing really tore through recent highs, pushed through the key range high here, and is now on the highest prices that we've seen in over a year, 42.25 here. If we look back, or nearly a year rather, last summer here in August we got a little bit higher here, but since this May time frame, price really hasn't pushed beyond 4,200 except for one time here where it did reach that 43.15 zone or thereabouts. Let's see this high right here, 43.27.5. So this is the highest levels we've seen since then. 100 handles left to go find those highs. Now overall, the break through these highs right here, if this is a break through this distribution here and we're getting the full-on expansion out of this 8-9 day range, then any pullback right now could be a buying opportunity as this thing looks to stretch it toward 4,300 up above. We also have this key range right here. So if we're going to push through the top of this key range and hold that edge, then we have two targets up above, 42.75 and 43.43 as those targets. So things could get very bullish here if this breakout is a true breakout. We do have Fed Chair Powell coming up here at 10 a.m. Central. That could lead to additional volatility in either direction, I suppose, here. So any failure to hold the breakout point could be significant. If there's a failure and by the end of the day we close back at 41.80, that could be a significant higher high fade that leads us back toward 40.60. So this breakout point here is going to be very important moving forward. If we take a look here at the NQ, mentioned yesterday, the NQ is unfadeable right now. You do not want to sell the NQ, and this is one of the bigger days that we've seen in the NQ here in a while, and it was through new highs basically. We haven't seen any prices through those highs in a long time. And when you look at this right here, again, this is recent resistance right here. These are the highest prices in over a year for the NQ easily as we approach the 14K level. So big time movement here to the upside. You'll notice the break through the previous year's midpoint, and it has been significant now. And while we could see some pullback here, that pullback could be an opportunity for bulls to defend as this thing tries to continue to expand the range to the upside. So significant movement here as this thing approaches 14K. Huge range yesterday. Do we get a fade after trend day? Does it become a check mark day again like yesterday? That could be a continuation up. Right now, the NQ still not fadeable at this moment. All right, let's take a look here at crude oil. Crude oil had a tremendous rejection a couple of days ago. We had this failed new low outside day event. Price held that edge. This is one thing we mentioned yesterday. If we pull back into that zone, can we hold it? If so, digestive day with a continuation that could play out ahead. And that's exactly what's happening right now. To hold this edge and to hold this pullback here suggested a continuation towards 74s. 74s still could be ahead today. But beyond 74s, that's where we get our 76 to 77 zone. That's the high quality mid of the range target. And then you look for this thing to continue toward 80.51. 80.51 is break even for the year and has been a sticky level this entire year. So again, 74s will open that door. But if we don't push through 74, we may continue to build as we work toward those highs. Again, nice continuation here off the previous year's low of 70.08. Taking a look here at gold futures. Gold reached our downside target of 1980. And then pushed way through it in the previous session. Huge continuation. Actually got to prices below 1960. You can see as low as 1954.40 here yesterday. Right now, narrow range inside day. Just 15 points of range, 60% of average. A steady continuation. And when price was giving us failed new highs after this strong high, we mentioned that the likely return back to 1980 was good as a downside move. But any push between 1960 and 1980 is about where you want to start watching for signs of rejection. If we can find a strong low, that could snap us back up, and we could be working our way back toward 2033, which is the FOMC key level from above. So far, that level has been offered, sideways around it, then offered. So the next rejection we find, wherever it may be, could snap us right back to that level. Until then, you got to avoid fading this until we find that strong low. All right, taking a look lastly here at the YM. The YM right now up about 1/4%. This one had a strong continuation to the upside. A nice continuation up, a pullback, and a defense here off the midpoint and off the previous year's close, and the check mark trend day up. A very strong finish for the YM yesterday, especially in the final 2 hours of the day. Here, we're just kind of holding at the moment, narrow range day. Again, any pullback here could be seen as an opportunity for bulls to defend as this thing works its way toward 33,800. Again, a narrow range at the moment. We do have Fed Chair Powell coming up here pretty soon to provide some volatility. And if we do see a higher than expected range today, we could be looking at about 400 points of range. So if we can find the strong low for the morning, you can project higher 400 points. If we find a strong high this morning, project lower about 400 points, and you could get the day's range. All right, that is it for now. We'll see how this plays out heading into the weekend. Again, happy Friday. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.